Good morning, everybody. This is Todd with the Forex Nitty Gritty Insiders Daily Video. It is Non-Farm Payroll Friday. I hope you're having a great day today, and hope you had a good week with trading using the simple trading method. We know that with the holiday on Wednesday and non-farm payroll, that the market is likely to be volatile, and so if you're trading on Fridays, you want to make sure that you're taking advantage of the smaller risk sizes, and consider, especially with what's been happening in the weekend, I should say, with the markets that we've seen gaps, that it's probably a good idea, if you can, to not be in positions right now over the weekends, or if you are, make sure that you take into consideration the fact that there can be some gaps in the market. Now, I've got up here a chart of the Euro US dollar. This is a 5-minute time period, and this is right before the non-farm payroll came out today. And you can see that, and this is not uncommon for the markets as the announcement gets ready to happen. You get these pre-announcement movements where it just is kind of saying, okay, it's going down, no, it's going up, it's coming back down, really kind of trying to figure out how it's going to react to things. Now, obviously we don't know what's going to happen, but in fact, let me blow this up so we can see it a little bit clearer here. And right here is just about 10 minutes before the announcement. This is the bar, and it started to move. We had not a huge movement, certainly not outstanding, but 13 pips on that move. As we went closer to the announcement, here's the announcement as it came out. You can see what happened. We went from basically chopping sideways to a big long candle here. Now let's see how long this candle was. About 30 pips. So about twice of what these other candles were, and those candles were pretty big, probably 3 times what the average range is on a 5-minute chart. In fact, we can go look at that. We can put on here the average true range, and you can see that the average true range really is between probably 5 and 8 pips, and this one moved 30 pips. So we had a huge movement here. Now, could we have taken advantage of a trade on this? And let's say that we put in here an order to go short on a move below this channel or above this channel here. Certainly we could have done that, and we would have actually made a pretty decent profit here, kind of straddling the price action, the price movements here. And let's see what happens. This thing... And really, unfortunately, what happens is somebody would take this, get into it, and it actually went right back up again. You know, that 30 pips was erased pretty quickly. So you could put, you may have gone short and then put your stop loss somewhere in here. You actually could have gotten stopped out on this if it was too close. Now, if you would have adjusted it to break even as it moved down and taken part of your position at 30 pips, then you would have been okay. But you can see what happened. Eventually, this thing really sold off. And again, we're on a 5-minute chart here. And so the danger of having a stop loss too close is simply the fact that you can get stopped out. And so what you're better off doing is placing your stop loss maybe up above the previous high, like normally we would do, and taking a little bit smaller position size so we don't get just simply whipped in and out of a trade when we're trying to deal with this added volatility. Now, things have settled down a little bit. They're kind of going flat. But when we see volatility like this, we have to be recognizing the fact that that volatility, if it doesn't work in our favor, usually goes against us and is pretty bad for us. You can see the volatility starting to slow down with the ADX lowering here. But right now if we were to look at the simple trading method on here, let's get this moving average. If we just used a 40-period simple moving average, it's going down. We kind of had an area where it moved back up a little bit, and then currently moving down below the lowest low of the last 3. And so we could easily see a long-term runoff of this. We had a move from the high there to where we're at right now of about 68 pips. Again, with a day like today, you want to be cautious. You want to make sure that you're position sizing appropriately, and you might want to take or consider taking a smaller risk position. And be very careful about holding things over the weekend. So with that, we will wrap it up for today and the week. Have a fantastic rest of the week, everybody. And we'll be back on Monday to take a look at how the market reacts over the weekend. So until then, have a fabulous weekend, and we'll talk to you soon.